Welcome back, investors, to Ticker Time News. I'm Adam, and Kroger, ticker symbol KR, traded up massively like a ship going to the moon after the company posted its fifth consecutive double-digit earnings beat in Q4, as well as another quarter of positive same-store sales growth. Perhaps most notably, the largest U.S. grocery retailer also smashed estimates with its fiscal year 23 EPS guidance of $3.75 to $3.85, translating to about a 3% growth at the midpoint year over year. Although that may not seem like much as prices continue to rise, Kroger's earnings guidance shows its ability to counter strong inflationary pressures. And that's the name of the game right now. Now, what immediately jumps out in Kroger's Q4 report is its fresh department, like groceries. It outpaced total identical sales of 4%. This demonstrates a broad shift in consumer taste towards at-home food consumption. This pandemic forced many individuals to begin focusing more on cooking at home. And the trend, given that many restaurants have become pricier and slower due to staff shortages, is persistent even as the pandemic winds down. The company's remarks on the resilience of at-home cooking trends echo similar comments from other national grocery chains like Spartan Nash, ticker symbol SPTN, and Albertsons, ticker symbol ACI. Oh, and before I forget, beat this crazy market with us by clicking the first link in the description. Okay, now this is not to say that Kroger is immune to similar headwinds, but Kroger has done a really well job navigating those issues. For one, the company has done an excellent job at competing in the tight labor market, raising wages and expanding benefits to attract and retain talent. Additionally, Kroger has looked to transportation carriers outside of its industry to keep its shelves well stocked, which has kept product flowing predictably across its network. Even with the additional costs from transportation and labor, Kroger still topped earnings estimates, posting earnings of 91 cents per share. Given the higher margins they carry, Kroger's private label options also played a role in the company's better than expected earnings in Q4. Since off-brand options tend to have lower prices than the name brand counterparts, consumers gravitate towards those products during inflationary times. Everyone wants to save a buck. Along with Kroger's fiscal year 23 outlook of about 3% earnings growth year over year, the company is also expecting positive identical sales growth of 2 to 3%. Given the company's excellent comparison growth of 14.1% in fiscal year and its much better than expected growth of 0.2% in fiscal year 22, Kroger's identical sales guidance for fiscal year 23 signals that at-home food trends are set to remain for the foreseeable future. And this predictability of identifying trends can help us identify other stocks that will perform well also to beat this crazy market. Overall, Kroger delivered another impressive quarter in Q4, marked by standout results in its fresh departments. Kroger also demonstrated strength in its digital offerings, seeing 25% more households use pickup and delivery in Q4 than Q3, leading to digital sales growth of 105% on a 2-year stack in the quarter. Bottom line, I remain bullish on Kroger's future, especially given the secular tailwinds that are keeping strong winds at its back in fiscal year 23. Also, by guiding to EPS of $3.80 for fiscal year 23, its forward PE ratio sits at an attractive 14 times, which helps to limit the downside going forward. And that's exactly what you want to find in today's market. Well, that's what I think about Kroger's earnings report. What do you think about it, their performance, and their guidance? Let me know in the comments below, as your comments make these videos so much better. Smash that like button, share this video, and click that first link in the description to get our top 10 stocks list and so much more. And if it's your first time watching, click subscribe. For Ticker Time News, I'm Adam. Thank you so very much for watching, and I'll see you in the next video.